presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Moe.
Hello everyone, and welcome to the Compak Asset Management Market Wrap YouTube update for November 6th, 2020. I'm Moe Ansari, President of Compak Asset Management and the Chief Investment Officer. I'm going to talk about the markets. Obviously, we have to take a look at the elections, the outcome, and the impact on the economy and the markets. The pandemic update. Everybody seems to have forgotten about the pandemic. Let's talk about that and still see how that's going to impact the markets going forward. Then obviously the technical analysis. And let's take a look at the charts, the language of the markets, and what the markets are trying to tell us. Let's start with the elections. We did get the election as of this evening, Friday evening. We're looking at 264, according to Fox News, electoral votes for Mr. Biden, 214 for Donald Trump. And we are looking at Pennsylvania, Georgia, North Carolina, and Nevada, and Arizona. I think they need to put Arizona in there also. North Carolina is just about done. I think that is going to go to the president. Pennsylvania, Georgia, Nevada, and Arizona. The president is leading in Pennsylvania, and there's a lot more votes to be counted, and those are skewing towards the Mr. Biden. So Pennsylvania, Mr. Biden is leading and skewing towards Mr. Biden. Same thing in Georgia. Most of the votes are counted, and the president is ahead by about Mr. Biden is ahead, and he is ahead by about 4,300 votes right now. There's going to be a recount there, and then Nevada. It is expected most of the votes are coming from Clark County, which is Las Vegas, tends to be Republican. That is expected to go towards to Mr. Biden. If it does, then he has 4 ways to win and become president. I believe the way the numbers are going right now, that we are going to see a President-elect Biden to be announced in the next day or so. That's the way it looks. Now, there will be a lot of court cases, as the president has said. He is going to take this to court. I think there's only a couple of things that are really viable. That's what we're looking at right now. The only viable thing is the votes that came in after Election Day in Pennsylvania. A lot of the other states has said, look, if the votes come in, you can vote until this day or that day. And it was by the legislature. As long as the legislature says, as long as it's postmarked before or Election Day, it can come in the mail 2 or 3 days later. In Pennsylvania, the legislature did not do that. The courts mandated that it could be another 3 days, and that could be a problem. But it's only about 2,000 or 3,000 votes. Even if those are thrown out, those votes, in the long term, if there's a 20 or 30,000 or 50,000 number by which Mr. Biden has won, it makes that also moot. So I believe the election results are going to hold up. We are going to have a little bit of a back and forth over the next couple of days. But the good news is the market likes the return as far as it's going to be gridlock. We could get a Democratic president, we could get a Republican Senate, and we could get a Democratic House. That will be the best of all worlds as far as the market is concerned. A Biden presidency, it's divided government. That's what it will. If Mr. Biden becomes president, he will not be able to push through tax increases. He would not be able to push through new regulations. That's why the tech stocks went up. That's why we saw a number of areas go up. He could be making some changes as far as through his executive orders. We think he might be able to do something in the energy field, might bring in CAFE, which is those mileage numbers for cars and things like those that he might, but that just makes a little bit of difference on as far as the narrative goes. Not much difference. Immigration, we could see a different narrative there also. China policy, a lot of people expect Mr. Biden to be easy on China. I do not see that happening as far as there's bipartisan support to be tough on China, that we're done with China and allowing China to steal and take all of our technology without paying for it. So China has to start learning to live by international standards and international rules. As long as China does that, I think the tone will change, but we could be tougher with China. So those are some of the changes that I expect. overall for the market, we will get what his market was hoping for was a blue wave and expecting a big stimulus package. Well, now people are saying, well, we might not get such a big stimulus package, but Mr. McConnell said, the leader of the Senate, that he is going to start talking about getting some kind of package. Nancy Pelosi, she lost seats and she's been weakened a little bit. She might be willing to compromise also. With that, I think we could get what is called a skinny stimulus package, which in the short term could help the market. We got unemployment numbers today that were better than expected. So the economy is doing okay, but we do have other problems. We saw the unemployment numbers come out. If you see unemployment, it's back down below the highs that we saw during the last recession. Payrolls, which went straight down, have come straight back up. It is a V, and we're still not to the unemployment numbers where we were before pre-pandemic, but we are moving in the right direction. And as far as the market is concerned, we had one of the best weeks in the market since April. So it was a great week in the markets with all the people, everybody being so scared that, oh my God, if he wins or that one, he wins, or Trump wins, or Biden wins, whoever wins, it could be the end of the market. As I've said, for the last 30 years, you've heard me on Market Wrap talk about this. We've had elections before. Markets move. The markets will figure it out as long as we don't have a contested election, which I believe we'll have this one sort of just about settled in the next couple of days. Looking at the pandemic, now that has been pushed off the headlines and everybody has been looking at the election numbers. In the meantime, the pandemic continues to spread. The virus continues to spread. We hit all-time highs. The short day, one-day moving average is now going above the 7-day moving average. Blue is the new infections, and they're going farther ahead. So we're seeing the pandemic accelerate. The spread of the pandemic is accelerating. We're getting the second or third wave, whatever you want to call it. It is expanding here in the United States. That could lead to some more soft lockdowns. And if there's not lockdowns, not too many people will want to go out. If we see more and more people getting sick around us, more and more people will decide to stay home and not go out. If you look at the daily positive, we hit an all-time high, 120,000 cases. We broke 100,000 for the first time this week, and then we hit an all-time high of 120,000 infections on a daily basis. The death rate is nowhere close to what it was in March, but we are the scary part is we're starting to move up also on the death numbers also. If you look at the excessive deaths, these are the regular deaths in orange, and then you see excessive deaths. So these are blue is the COVID deaths. And if you're older, you have a higher risk, just be very careful. That's what this is showing right now, that there are excessive deaths if you are older. One of the things that we've seen is there is a way. They gave a performance, pay for performance or performance-based payments to nursing homes. Says, look, if you keep these older people safe, you continue and try and make sure they don't get the virus, their infection rates, death rates dropped by 27% in September. COVID infections fell by 20%. Yes, we paid them $333 million to 10,500 nursing homes, but that is a lot less that we were paid. That if these were some people who were hospitalized, had to go to ICUs, that would cost a tremendous amount more for medical expenses. So what it all boils down to is you give people incentives, the right incentives, it works. Let's take a look at some of the charts. Markets, here's a 60-minute chart. Each one of these red and green lines that you see, the vertical lines, that is 60 minutes of trading. We made a fifth wave bottom, wave 1, wave 2, wave 3. We just went through wave 4. We might get a little bit more back and forth here before we head back up towards 3,600, which is the all-time high, 3588. 89 is the all-time high. That's the way the charts look. That's my opinion. That's the way we're looking at it. And that was also the high last month. In October, we saw a high of 3550, and then the September 2nd of 3588. Those are the next resistance area if you look at the charts. That 3600, approximately 3588 is the September high. This is the October high. And then if we can get above 3600, then we could start to see a wave count. All of this has been just back and forth, up and down, for the last 2 months. If you can break out above this level, above the 3,600, that gives us a 2-month base that we've built and start the next move to the upside. Where can we go on the upside? If we can get above this, we could see an extension of the third wave taking us to 3,750, and then a further extension long term is 4,000. That's the daily charts. Looks like we've just completed the fourth wave, the weekly chart. When we're looking at this, you can see that we've just gone through this fourth wave. We might have already completed the fourth wave, and now we're starting the fifth wave to the upside, or extension of the third wave, which could take us. But this is a weekly chart. It could take some time to get there. It's not going to be immediate. Same thing with the NASDAQ. We came down, got above the 50-day moving average. We are right up against resistance. This is about 12,000. 12,074 is the all-time high that we put in September 2nd. Again, breaking out above it, we can start the fifth wave to the upside. The fifth wave target is 12,800 or so is the projection, Fibonacci projection. Doesn't mean it has to go there, but that is the projection that I'm looking at right now on the weekly charts. Looking at the gold market, long term, we had the fourth wave pullback. I said 1850. Well, we got to 1851 last month. This week, we were earlier on. Last week got to about 1859, but now we're back solidly above 1900. Looks like we're going to head towards resistance, which is 2000 and change. That's the all-time high. Then the fifth wave looks like about to 2050 or 2150 or so. That's what I'm looking at right now. That's the way the markets are projecting. Wonderful week in the markets, a lot of volatility in the markets. That's what we've seen. And again, if you would like to get a daily update, don't forget to download. Just click on the link below, and it'll take you directly where you can download the app and listen to the daily edition of Market Wrap, where there's a 1-hour broadcast. We have some great guests that I have had. I've done that for the past 30 years, and you can tune in, or it will be downloaded automatically, and you can listen to that at your convenience. And don't forget to subscribe to this channel. Whenever I do an update, you will get an update automatically, be notified, and share this with your friends and your family so everybody gets the information, so all of you can make, I hope, better decisions. The more information you have, the better decisions you can make. So make sure you subscribe to this channel. Thank you again for tuning in. That's my views for this week. I'll be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indexes through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.